Hi, and welcome to another video. And today I want to talk to you about the difference between a trader and investor. And one of the key things with trading and investing is you need to know yourself. You need to understand your mind and how it works. Because when you're a trader, you are short term, very high pressure, you follow trends, you work with individually, but you have to see what the majority of people are doing and you have to move that way. Now, when you're an investor, you have a totally different mindset. Investing is all about sitting back, being patient, watching the markets, taking advantage of the opportunities that are out there, and then letting the market change and come to you. It is a far more relaxed way of working. It doesn't mean that you can't trade and be an investor, because you can do both. I am predominantly an investor, but I trade when the opportunities are there. Traders are predominantly traders, but they do have some investments. And the investments are there quite often because they need that as a balance, as a business, as some sort of offset for that counters the trading for them. So let's look at the different mindsets for each. First of all, a trader. Now, a trader is able to make money in an up market as well as a down market. And the way they do that is to follow trends. So they are looking at what 95%, 99% of the population are doing. So for instance, we've just seen gold go up. If everybody's in there buying gold, pushing gold up to all-time highs, traders will be in there trading on the price of gold going up. Now, when property is out of favor and the price is going down, traders will be there following the price going down, and they will be trading on a price drop. Now, I want to explain trading, because trading is basically placing a bet, and that is what a trader does. They place a bet to say that they think the price of something's going to go up or the price of something will go down. And it can be absolutely anything. You can trade on anything. Most often I hear people talk about Forex. Well, Forex is trading or betting on whether one currency is going to go up or down against another specific currency. So you have two currencies, and you can have lots of two different types of currencies and bet on each one of those, whether you think it'll go up or down. You can trade on oil, gold, pork belly, you name it, you can place a trade on it. Okay, and a trade is simply a bet that it's going to go up or down. That's the easiest way to explain trading. So traders work short term, and by short term, they will have a trade that lasts 30 seconds, they'll have a trade that lasts 24 hours. The sooner they can get in and out on the trade, they make their money or lose it. It's very much individual, because trading happens so fast. Very few people have chance to consult someone else and say, oh, what do you think? Do you think this is going to go up, or do you think this is going to go down? They can't have a discussion on it because the trade is like that. And click of the fingers means you make money or you lose money, because it is possible to lose more than what you place on a trade. Mindset. Now, traders will operate mainly from two mindsets, one of fear and one of greed. And this is where you need to understand yourself and the type of person you are. Because if you operate from fear, you would use a certain type of strategy to trade. And if you operated from fear, but you used a strategy that applied to greed, then it will go against you. 99% of the time, it will go against you. So you have to understand the type of person you are. Do I operate from fear? Do I operate from greed? Am I an investor or am I a trader? Now, when you see enormous claims about make all this money within a very short space of time, realize that traders have actually learned the skills of trading for many, many years. And they will have been trading for 4, 5 years, maybe more, before they start to really make any money from trading. Because historically, 90% of people will lose 90% of their money in the first 90 days. So if you are someone who thinks, I don't like losing money, trading is not for you, because you will lose a lot of trades. When I was learning trading, I worked with a guy, and he'd worked in London in the stock exchanges as a trader. And he told me that when you get really good at trading, you will get 7 out of 10 trades. So what that means is you place 7 trades, you place 10 trades, you will lose 3 of them. 7 of them will work. But I was talking to a trader only a couple of months ago, and they said it's now 6 out of 10 trades. Why it's dropped, I have no idea. I didn't go down that route asking him, but he said the statistics are, if you are exceptional at trading, you will get 6 out of 10 trades. That's almost, well, it's a 60-40 split. So for 40% of the time, you will lose money. And for 60% of the time, you have to hope that you have created enough positive trading to make up for the money you've lost and generate more. And one of the last things I want to mention about a trader, and I'm not knocking back trading because trading is a part of the industry and there are people who are phenomenal traders, but traders burn out very, very quickly. They work long, long hours sat in front of a computer. And they will be up very early in the morning and they will go to bed late at night, and they will sit in front of a computer because something might happen in the market that is going to affect a trade that they are thinking of putting on or a trade they already have in place. So be prepared if you want to go into trading that it is a time-consuming way of making money. And yes, you can make a lot of money on trading, but you also have to be prepared to lose a lot of money. Investing, on the other side, is totally different. And that's where I am an investor. So as an investor, I am watching what happens in the markets, and I do watch the markets as closely as a trader would watch the markets. But I'm looking for the ones that are out of favour. What are people not talking about at the moment? What are they saying? Get out of this because it's going down. I am watching the out of favour investments that mean I can go in and I can buy low, because investing is about buying low and selling high. But it doesn't mean I'm buying low today and selling high tomorrow. I am actually acquiring assets for the long term. And much of what I have as an investor, I've owned for 20 years or more. Because some of the cycles in investing are long-term cycles. Investors build teams. We need teams around us who can do the work for us. And when I say do the work for us, if you're buying property, you need someone who can find you property deals. You need someone who can put the finance together. You need a solicitor who can do the conveyancing. That is building a team. And the better your team is that you have around you, the better the results that you are going to achieve. So investing is about building teams. And investing is about being patient and letting the market come to you. Gold, we're talking about gold being at the highest all-time highs. But I started investing in gold 20 years ago when it was at $400. And I just need to clarify, gold is in US dollars. So it was at 400 US dollars. Today it's at 1900 US dollars. It has gone up, it's gone down, it's gone up, it's gone down. But it has been in this continuous upward cycle. And it has a long, long way to go yet. In my opinion, it has a long, long way to go. So gold is something that I'm holding long term, as is silver and platinum and palladium and copper and all the other metals that I invest in. I hold them long, long term. And I have to wait for the market to be ready to pay me the profit and give me the reward for holding that investment for such a long time. And the other thing is that when I go into a market, I'm trying to make the profit going into the market, but I'm also making the profit going out of the market. And if I want to take a break, I'm not tied to a computer screen saying, I need this, I need that, I don't need it, I do need it. Not like trading. Investing is far more relaxed. Investing is a word that has been used out of context for a long time. And when I hear traders say I'm investing and they're not investing, they're trading, it's really providing a conflict there for people who are not traders and are not investors. So please remember, trading is not investing. Trading is one skill set. Investing is a totally different skill set. And yes, you can use a bit of both, but you need to have a totally different mindset when you are trading to when you are investing. And when you are a trader, you have to think, I have to make money now, I have to get in and out on this trade. When you are an investor, you are preparing to invest in something for a long, long time. So I hope that explains the difference between trading and investing. And whether trading is for you or investing is for you, only you can say, because you need to understand yourself and you need to understand the type of mindset that you have. And once you understand your mindset, you will know whether trading or investing is the best way for you to go. Thank you for watching this video, and please, if you've enjoyed it, help me to encourage more people to be interviewed and bring you more fantastic information simply by hitting the subscribe button and the notification button. And if you've liked the video, please give the video itself a like. Thank you again for watching, and thank you for helping me grow this channel.